Choose any ATM of your convenience and stand a chance to win gold sovereigns.
Lanka Pay.
Releasing the Financial Stability Review for the year 2024, the Central Bank of Sri Lanka stated that the financial system stability was maintained during the first half of this year amid spillovers from the challenging macro-financial conditions experienced during the recent past. The country's monetary regulator highlighted that the overall stabilization and gradual improvement of domestic macro-financial conditions eased the pressure on balance sheets of households and institutions to some extent and thereby lessened the risks faced by the financial sector. The CBSL noted that the downward trend in financial intermediation subsided and showed signs of stabilization as credit growth entered positive territory, albeit lagging behind the pace of deposit growth. Further, the decline in market interest rates with the accommodative monetary policy stance, along with falling inflation and lower risk premia, which resulted in a partial correction of interest rate anomalies, supported the gradual uptick in credit. The Financial Stability Review highlighted that, along with the improvement in macro-financial conditions, financial markets operated with improved stability during the period under review. Accordingly, financial market stress remained broadly at lower levels, particularly from the end of 2023, with some volatility during the early part of the second quarter of 2024. CBSL noted that resilience of financial institutions gradually improved during the first half of 2024 amidst easing macroeconomic conditions, as reflected by key financial soundness indicators of the banking sector, such as credit quality, liquidity, and capital adequacy. However, the non-performing loans ratio remained elevated, highlighting continued challenges, while the provision coverage ratio improved. Amid declining market interest rates and the gradual uptick in domestic demand, the CBSL stated that credit growth of the banking sector witnessed a resurgence, particularly in terms of the private sector, while the dependence of state-owned enterprises declined mainly due to the central government absorbing certain credit facilities of a major state-owned enterprise. Going forward, the central bank stated that it will diligently monitor systemic risks and promptly implement appropriate and macroprudential and microprudential policy measures to address any emerging risks to ensure continued financial stability. The CBSL is of the view that the financial system is expected to perform better with envisaged improvements in asset quality and build-up of capital buffers while prudently managing risks as the economy further stabilizes and advances amidst continuing challenges. Although the unprecedented gravity of the crisis created deep macro-financial imbalances within the economy, the central bank highlighted that these imbalances are gradually correcting with prudent policy measures and reforms along with behavioral responses, thereby supporting financial system stability. Hence, while the progress of the financial sector thus far while managing the spillovers from the economic crisis has been commendable, it needs to be continuously strived towards assuring financial stability in the medium to long term. The central bank is also of the view that further readjustment of imbalances in the external sector and the fiscal sector, particularly due to suppressed import demand and delaying of meeting selected sovereign debt obligations, may also need to be cautiously handled to ensure the stability of the financial system. Nevertheless, the finalization of external debt restructuring would pave the way for accessing further financial resources from the external sector, albeit in a prudent manner.